Hey, Bill Soriano from Pittsburgh. It's Friday, 1:26, about 11:25 a.m., or that's what my computer says here. And here's the trades that I posted today in my group, the Forex Trading Authority group. And here are the trades from the day. And as you can see here, I made the worst decisions today. I pulled out of two trades early with a small loss that would have got me 20 pips, at least 20 pips on each. It was a rocky start. Pulled out a GJ too early with 33 pips, and since I lost the first AJ trade, I was supposed to double down on the next one, but didn't. Then I couldn't change my take profit in time as it was free falling down, but I got back 12 pips. Another Freaky Friday for me. What could have been Freaky Friday? Hashtag what could have been. Hashtag Freaky Friday. So I'm going to show you these trades here in a second here on MT4. But I just want to say, why do I post my losing trades when a lot of people don't? You see the losses here. I did make $7.51 for the day. But why do I show you my trades? Why do I show you my live account trades? Why don't I use my demo account and increase these lot sizes here to 10, 15, 20, 30, 40, 50 lots, and then magnify the total profit that I made for the day? Why don't I do that? Well, a lot of people that do that are trying to promote a specific program as an affiliate so that you'll sign up and so that they'll make money. And there's nothing wrong with that. As a matter of fact, I am an affiliate with iMarkets Live. But my point is that I don't necessarily care if you sign up with iMarkets Live or not. I'm not an IBO. I'm not an independent business owner. However, as a customer of iMarkets Live, if you refer two other customers and they pay, then your training is free for as long as you always have at least two paid customers every month. You get your training for free, and that's awesome. And the training's awesome, and the signals are awesome. And as a matter of fact, if you're trying to get started in Forex, the best solution for you is iMarkets Live, because while you are going through the training, you'll be able to take actual trades because of the signals that they provide, and you'll be able to make money right away while you're still going through the training. They have excellent signals with swipe trades. They have a harmonic scanner. They have a new web scanner now that's unbelievable. People are making thousands with it. But the point is that as you're going through the training, you'll be able to take signals and make money until you get enough knowledge to decide how you want to trade and what specific strategies you want to use. But getting back to my point, why do I show you my losing trades? Why do I show you just my live account, my actual live account with just $7.51 profit? Why don't I magnify it, use my demo account, show that I'm doing 20, 30, 40, 50 lots and magnify this profit for you? Because, like I said, I get up, and I've said this before in other videos, I get up every morning and I go to a job. I go to work. So I don't have to worry. I don't have to worry about making money promoting iMarkets Live, or I don't have to worry about making money in Forex for that matter. I go to work every day. So my bills are paid, my mortgage is paid, my health insurance is available. I don't have to worry about not being able to pay my bills, or not being able to put food on the table, or make sure that my family has everything that they need. That's all taken care of. So I'm able to show you the true results and unbiased results, because I really don't care if you join me in iMarkets Live. I'm just showing you what you'll be able to do once you go through the training and get started on your own. So enough of that soapbox there, but I just wanted to point that out again, because I don't know if I ever said that in another video. But anyway, if we look at the trades here and we go to the first trade I took today was in EU. So again, my trading style, guys, is that I try to pick the high or the low of the day. And I try to trade or get into the trade as close to that high or low as possible. And the reason for that is because I'm going to use that high or low to determine where to set my stop loss. Okay, so that's going to determine my risk. So the closer I get into the high or the low, the less my risk is going to be, the more lot size I can take on the trade. Okay, so that's why it's important for me to try to trade as close to the high or the low of the day as I possibly can. So I have some strategies that I use during the Asian session, and this box right here is basically most of the Asian session. It starts at 5. This box starts at 5 p.m. Eastern time, as I told you before. The Asian session doesn't actually open until 8:30 p.m. Eastern time. This box ends here at 1 a.m. Eastern Standard Time. And then in here we have the London Open right here. So, and then that takes us through here into the New York session now is where we're at. But what I'm trying to do is I'm trying to pick the high of the day. So when I look at this, when I wake up about 4 in the morning and I look at this particular pair EU, I see that it's made a move up. So I'm looking for a move up or down in the opposite direction of the main trend, okay? And in order to determine the main trend, I simply look on an hourly chart. There's lots of ways to do it, and this isn't the only way, maybe not even the best way, but I'm just going to look on the hourly chart, okay? And this teal line right here, which we call the water, is the 50-day moving average, and the white line, which we call the mayonnaise, is the 200-day. So if I see the 50-day above the 200-day, I know that we're in an uptrend, okay? When I see a lot of space between the two, that tells me it's a pretty strong uptrend. And when I see them both still kind of moving up, then I know that's also a pretty strong uptrend. So they don't always look as clean as this one does in EU, but it's in an uptrend. So that means I'm going to want to take longs on this. I don't want to get in short. I don't really want to get in on the short side, okay? But I can if I see an opportunity. But what I really want to do is I want to get in a long because this is going up. I want to try to get 50 pips in a long trade. But if that doesn't present itself, I can try to go the other way with this for less pips. So what happens is, and then the other thing is today's Friday. So Friday, a lot of times you'll see what will happen is a currency will make a big move up during the week. Okay, look, this is during the week here. And then sometimes it will almost give it all back on Friday. Okay, that's not what's going to happen here, but you could see the little bit of a move down here during this Friday trading session. So when I go back to the 15-minute chart, I use that to take my trades. I see the move up, so I know I'm going against the main trend. So I'm a little bit nervous during that, but I know that I should be able to, get maybe 15 to 20 pips against the trend, with this trade. So I see the top here. When I see this hammer pinned to the top, and then I see, this up candle and then the big down candle here. That's telling me that that's probably going to be the high of the day. And so far, I appear to be right. So what happened was I got in this trade right here on this candle. I took a short position right here. And I generally have a rule that if I'm in a trade for 2 hours and it doesn't start to move in my direction, I just get out, right? I just take myself out of the trade. I might be +5, I might be -7, whatever I am, I might be even. I just get out of the trade because it's just not moving the way I'm assuming it's going to move. So now today, that kind of worked against me. As you can see right here, I decided to get out of this trade on this candle right here. And I took a small loss. I believe it was $3.50 or something like that. And then, of course, right after I got out of the trade, this currency made its move down to the mayonnaise, right like I thought it would. Okay, and you could see here that I had an opportunity. I had a chance to pick up, I would have tried to get 25 pips, 25 to 30 pips. It actually dropped 40 pips down to the mayonnaise there, and then it started to move up. So when you take the counter trend trades, sorry, I thought I got disconnected there. But like I was saying, when you take these counter trend trades, a lot of times they will just move back down or up to the water or the mayonnaise. And it all matters how close. It's normally the water, but when the water is really close like it is right here, then you can expect to move down to the mayonnaise. And that's exactly what it did here. So I lost out on, getting 20, 25 pips on that trade. And then the next trade I took was the AU trade. And again, I put these little check marks here on the charts here, by the way, so I can show you where I get in and out of trades at. So again, now if I look at the main trend on this, again, it's up, right? 50 days above the 200 day. There's a big space. They're both moving up. A strong uptrend, right? So I really want to take my trades up, not down. But again, this one moves up, so it presents an opportunity to take a short position down again. If I get in, so I see this move up here, and I assume here that this is going to be the high of the day here when I see this pin here, these two pins here to the top. So I'm thinking that's going to be the high of the day. And as it turns out here, I'm actually wrong, right? Because it moves up here later in the day. But at the time, I could have taken this trade down to the water. Here's where I got in. I got in on this candle right here. And as soon as I got in, I was in profit, right? I got in, it dropped down. It was down about 10, 11 pips. Then all of a sudden it started moving up and it threw this big pin up to the top here. Takes out the high, but it doesn't close above the high. So I'm still good in the trade. But what happened was I got out of the trade right here. Because when I seen that I was up by about 10 pips and now I'm down, I just decided to get out of the trade. Because I had a strong suspicion that it was going to move higher. And of course it does move higher, but first it moved down to the mayonnaise where I could have got my money, right? So if I get in right here, I had an opportunity to pick up 20 pips down to the mayonnaise, just like I intended to when I took the trade, okay? So the next trade I take is AJ. I think I only lost about less than $1 on that trade. I'm not sure if it was 10 cents or maybe it was $1.10. We just go over and look at the thing here. It was actually 90 cents. So I lost $3.50 on the EU trade, 90 cents on the AU trade. Okay, so now what am I doing here, guys? Okay, so back to the charts here now. So now I look at AJ. So now I'm looking at AJ here, and I see this move up, and this blue line here is called the blueberry pie. That's the 800-day moving average. So this really isn't a move up high enough. You see here, I should have waited for this to get all the way up here into this stop hunt box before I attempted to take this trade. But sometimes when I see railroad tracks or a cord of wood like this sitting on the 800-day, that tells me that it's safe to assume that that's going to be a top. Of course, I was wrong, and I've been wrong a lot lately. But here's where I took the trade. So I take the short position right here, okay, and I get in the profit, but then it moves up. It moves way up here, and it takes out what I thought was the high of the day. Now I stay in the trade. It starts coming back down, then it shoots back up, and I get stopped out in this move up here with my biggest loss of the day on that one. So now at that point, I'm not looking at this, and I look at GJ. So when I look at GJ, I see these railroad tracks here, right, in this stop hunt box. And so I know, again, that should be the high of the day. Now, again, all these trades that I'm taking, they're going against the main trend. And this happens a lot on Fridays, by the way. On Fridays, you see a lot of this where you get presented trades against a trend instead of during the week when you're usually getting these trading opportunities with the trend. So anyway, I take the trade. I get in on this candle right here, the perfect entry for the trade, right? It plays around here, and then all of a sudden it just straight drops. Now remember, I'm going against the trend, so I'm trying to take these trades back to the water or the mayonnaise. I initially set the water, then when I seen it starting to drop, I moved it to down below the mayonnaise here. And I actually got 33 pips on this. But if you look at this trade here, man, after I got out of this trade, GJ drops another 117 pips. So I could have made a killing on this. Obviously, I'm not going to catch all those pips, but I like to get at least 50 before I get out. In this case, I took 33. I got out too soon. Okay. Then right after that, I go back to AJ, and AJ had made this peak here. He throws a pin, a hammer, whatever you want to call it, up into this stop hunt zone here, and I know then that's going to be the high of the day. But when I look at the chart, it's already on this candle right here, and this candle's starting to drop. So I immediately get in, and that usually doesn't work well for me, but in this case, it worked out. I get into the trade right about here on this candle. It drops all the way down again. I have my stop, I have my take profit down here at the mayonnaise, right? So I see this thing dropping. I'm trying to change my take profit, but it's too late. It's already being executed, and I'm out of the trade with a 12 pip gain. So anyway, that's what happened today. And like I said, it's really a case of, like I put in here, hashtag what could have been, because really I could have had probably close to 150 to 200 pips today had I played my cards right. That, of course, didn't happen, so I'll have to take my $7.51 gain. Again, this is Bill Sorana from Pittsburgh. Let's make it a great day trading Forex.